Here we go. Are you ready? Wow, I am very excited to be here with all of you. Some of you, many of you I've met before. Some of you I have not met before. For those of you that I have not met, my name is Tanya. Hopefully you've been able to catch the intro. Sorry, I definitely do go on. That intro, believe it or not, when I recorded the intro, I was trying to get it down to under 20 minutes, and I think it ended up being 45. So I can give you definitely some time points within the video that you'll probably want to draw your attention to, but I apologize. I am working with a coach to get my messages more succinct. So what I'm super pumped about today is we are planning for profit. I have been planning for profit with Canadian business owners now for the last, it's been over 10 years. I have been doing this specifically through boot camps, in-person boot camps, and then one-on-one coaching with clients. The boot camps probably account for about a third of my practice. The one-on-one coaching accounts for the other third. And now I am learning how to get with the times and trying to put this all online so that I can reach out to more of you more often within the comfort of your own office, on your own schedule, to get you these tools, because these tools, in my opinion, are extremely powerful. I've seen incredible transformations with businesses as we go through this planning for profit process. And it's a process that really is not taught in schools. I know, having gone to school for economics and then trying to get into accounting, this is a bottom-up approach, not a top-down. So it's hopefully going to definitely change the way you think about numbers and your business budget in particular. Okay, that's a little bit about me. A little bit about you. I'm very excited to let you know that we've got about 49 people in the challenge this month. This is the first time that I'm doing planning for profit online. So you can tell this is an online format. This is real. This is not scripted. It's not canned. There's no edits. I'm going to make mistakes. I'm going to say ums and ahs. And again, being the first time that I'm doing it online, you're going to have to give me a little bit of leeway with it, but thank you. So 49 of you, you're calling in primarily from Canada and all across Canada, with the exception still of the East Coast. We got to get some representation from there. But we've got just a big hello to some callers too from the Netherlands on this challenge, as well as London, England. So hello. I am going to be doing some homework to see if I can find you some tools that are going to be relevant with respect to benchmarking. Some of the references that we put in here are definitely from a Canadian perspective, but know that I'm going to do my homework to help you the best way that I can in this process. What else do I want to let you know about? We've got a lot of different industries on the call, and that's what I love about planning for profit, because it applies to everyone. So we've got, knowing some of you the way that I do, we've got retail, construction, hospitality, professional services, including bookkeepers, accountants, and lawyers. We've got manufacturing. We actually have some nonprofits on the call, and software as a service, the whole SaaS industry as well here. So again, this is going to be applicable to all of you. This is also going to be applicable regardless of whether you're B2B, so business to business, or B2C, business to consumer. This is also for you if you have multiple businesses, which a lot of us entrepreneurs do. We're the butterfly chasers, right? We love things that are sparkly and bright, and we tend to chase things. And with planning for profit, you're going to see that I want to get you anchored in financial viability before we start layering on more components that aren't financially viable. Sometimes we keep chasing the dream because what we have right now isn't working. So we think if we go on to do other things that the rainbow's on the other side, but there's a way to make everything work for you right now. The other piece that I want to draw your attention to is that there are basically talking about why you're here and why you're doing the challenge. You're obviously here because you want a profit, you want bottom line profit. Some of you are in a rather stressful situation when it comes to profit. Some of you are in a stressful situation when it comes to income. Others are here because you've gone through, it's called the Money Mastery Matrix. And so it's a 21-day challenge where we look at personal finances. Now, what actually comes out of that challenge is something that we call the magic number. So it's the number that you need to earn to make sure that you're taking care of yourself financially at home with respect to saving, investing, sharing, and spending. And so you might be here because I have said that your business is in a position to make sure that you can generate that magic number for you at home. So you're trying to figure out now that you're here, okay, show me how to make my business be able to do that. And the other reason why I hope that you're here, because we've talked about it in the Matrix, we've definitely talked about it in boot camps, and I've talked about it in the intro. And that is because one of the most powerful investment opportunities that you have right now, where you can make the most amount of money, is actually in your business. And that number is your net profit. Your net profit is the rate of return that you are making on your business investment for that specific period of time, be it quarterly, be it annually, however you're measuring it. So we have the opportunity right now to take our money and go down to a financial institution and make anywhere from 2% in a savings account all the way to 5, 6, 7, 8, sometimes 10, 11, 12% in different index funds and different investment opportunities. And yet for many of us who are operating at a less than 5% net profit, that number is going to resonate to you because I've mentioned it in the intro, we are choosing to do otherwise. And more often than not, that net 5%, that less than 5% net profit, doesn't account for a fair owner's salary, right? Fair market salary for the work that you're doing. So I'm going to leave that for now because all of that is in the intro video in terms of why you're here. If you haven't yet had a chance, please go check it out. So today what I'd like to do, this is going to be kind of a light day for us. I want to just take you through a tour of the equipment room, the planning for profit worksheets that we're going to be using, and then I want to frame our exercise, our first exercise, which is actually, I guess, depending on how many years you've been in business, it's a pretty light exercise, and it's what I call charting the data. And I know one of you has already done that, so thank you for doing that. I'm going to be taking a peek at your numbers later today. I won't say your name. All right, so what I want to get started with is the equipment room. So the equipment room, your planning for profit equipment room, it is found in the Epiphany website, so epiphany.ca. And this is an old version of it here, but it's going to be called the Planning for Profit Equipment Room. And where you're going to access it, there's a couple things that you're going to have to do first. Hopefully everybody can see my mouse scrolling around here. But in your top right-hand corner, you're going to become a member. That's the first thing you're going to do. When you become a member, it is going to give you access. So now if you have been through the Matrix program, you'll have access to the locker room, the equipment room, and now planning for profit equipment room, right? If this is your first time joining me and you are simply here for planning to profit, what you will have access to is just the planning to profit equipment room. So the planning to profit equipment room, it is not, to get in here, it is not the password that you use to become a member. The planning for profit equipment room, the password is my path to profit, all lowercase. So just make sure that you're clicking on this plan to profit equipment. That will get you into this room called the P2P equipment room. Now, once you're here, what is going to happen is that every day, because again, this is live, this is not canned, I will be taking a recording of each session. And each session, I can't exactly promise when that's going to be, but during that day, I will make sure that it gets recorded, converted, and stored to the appropriate day here. So I've already put the days together. The only day that has a video attached to it right now is this intro. So you can click on watch it. It'll take you to the video. Obviously, we have not done day one yet because I'm recording that now. So shortly after this video, you'll be able to watch it. This language will change. You can watch it and then be able to capture that, that daily drill, that exercise. So Again, you don't need to catch me live if you're not available to do so, but you can watch it later on in the day, and this is exactly where you're going to watch it. So a little bit different from the locker room. So every day is there. Now, if you did not get my email this weekend with all the tools and the templates attached, actually I only attached one of them, and that was the Plan to Profit worksheets. But this is where you can find everything in here. Sorry, I'm seeing some questions come in on my email here. So here's where our tools and our downloads are, right? So day one, the Plan to Profit, this is the playbook. So if you ever want to get a copy of the PowerPoint presentation that I went through in the intro, this is where you can find it. This is the exact same play deck. Plan to Profit worksheets, here they are right here, download the worksheets. Your debt repayment calculator, that's where you're going to download it. Your weighted pricing model, your Plan to Profit calculator, and your marketing mix model. So I might be adding some as we go through this because, again, this is my first time doing this online, but typically these are the tools that I use when I'm doing a boot camp or when I'm working with a client one-on-one. So tools are always here. Before I forget as well, this space, this equipment room is open to you forever and always. So I don't want you to feel like you have to rush and get everything downloaded, because just like when you do the Matrix Challenge, this is going to be an ongoing process for you. So know that this is always open to you. And if for whatever reason I have to change the password, I will be notifying all of the participants that the password has changed, so you can always get right back in, just so that you're aware of that. The navigation system downloads, I'm going to be speaking to you about this at the end, and any sort of resources that I reference, very similar to like our bonus rounds in the Matrix, they are in here for you as well. So benchmarking tools, NAICS codes, Credit Karma, all of that good stuff is in here for you to access. Again, I'll be building on that as we go through. Okay, so that's the equipment room. Now I would like to take you on a tour of your worksheets, just so that you understand exactly what you've gotten yourself into and how this is going to work for you over the course of the next 10 days. Unlike the Matrix, we have no drills on the weekend. You get Saturday and Sunday to totally relax as a business owner. So just to draw your attention to that. So 10 days, absolutely, that's what we've got in store for us. So when you get in to your worksheets, you might find it a little confusing. One of the very first steps that we have is actually called step one, and that is charting the data. The way that the spreadsheet is organized is that it's frozen some of the frames. So I just need you to play around with these arrows back and forth so that you can find step one, charting the data, which is actually what we are going to be doing today together. So charting the data, when you get in here, I am going to, after we take our tour, I'm going to show you exactly how you chart the data so it's available to you, and there's a lot of lessons that we learn from it. So I'm not going to get too entrenched in that sheet today, I am, but in a couple of minutes. Now, the next thing you'll notice, I just need to move this so that I can see what we're doing here. The next thing you'll notice is that there's a couple of tabs here, 2011 to 2018. I'm getting you to chart data that goes back 2011. So if you've been in business before that, so if you've been in business before 2011, I want you to just take a look at your notice to readers or your bookkeeping reports, and I'm going to have some questions for you tomorrow, but just take a look at them and see, you know, were there years that you were profitable? Were there years that you are definitely not profitable? Are there changes? But I think for what I've noticed is that if we can get a pretty good snapshot here from 11 to 18, that will tell us quite a bit. So let's start there. If you've not been in business since 2011, that's fine. Obviously, you know, start recording from when you have started your business. Super easy. So all these tabs do is they take the numbers that you have imported, and we're going to go through this in more detail tomorrow, so don't get too hung up on this today. But basically, it's taking the financial dollar value of what you chart today, and it's converting it into a percentage. That's all it's doing. Okay, so these are separate year-to-year tabs that will then take that information, and on an annual snapshot, you can just start to take a look at how all your dollar values convert into percentages. Again, I'll be doing that in more detail tomorrow with you. Step 2, when you look at this tab, step 2, review the findings. This is now where it takes all of your percentage values, and compares them year over year. So this is almost like your chart the data in a dollar value, but now it's converting everything into a percentage and putting it right beside each other. When you do this, you will be amazed at what shows up for you. This is what we call day 2, the highways and the hazards. You're going to see, probably for the first time in your business, exactly what's been happening on a year-to-year basis. Because usually in our notice to readers, we see a percentage of change over the previous period. We don't see a percentage of revenue. So this is different from a percentage standpoint, because it's not a percentage of change over a last period. It's a percentage of your revenue for that existing period, for that same period. So that's an important distinction here. Step 3 is where we are going to together forecast for profit. So it's very similar to a cash flow, but this is where the differences are with retail and with inventory levels. We're going to come back to that at the end, but this is a really important step for us to understand how to actually make sure that our bottom line profit goal is never compromised. So with this tab, we're going to break this down into a couple of steps actually throughout the course of our time together. But the first thing we're going to do is we're going to start budgeting for all of our operating expenses. Then we're going to assign very specific revenue streams, right, or revenue buckets, the cost of goods for each revenue bucket, and then your price, and then we're going to map out how many units you expect to sell and when you expect to sell them. So again, I don't want to overwhelm you. I just want to show you exactly what we're going to be doing together in this tab, step 3, forecasting for profit. Step 4, again, you're going to have to trust me on this process because this is going to be like, what are we getting into? This is your cost of goods. And we're going to take a 2-tiered approach to this, just like I talked about in the intro video. This is where we are going to understand all of our costs including our employee costs, right? Our labor contribution. And most people right now, when it comes to cost of goods, we're usually budgeting for what I call phase 3, so the delivery phase, and we're usually accounting for those materials and sometimes the subs. But very rarely do we account for all of our labor and our costs in phase 1, the design phase, so everything it takes to get the business. Phase 2, what I call the development phase. This is the phase that they've said yes to the business, but you haven't quite started to execute on it. This is usually where schedules are set up, procurement's done, right? Their systems are set up in your book, right? They're set up as a client in all of your infrastructure so that you can do business with them. You'll be amazed at the money you are spending on getting this deal in the door, whether it's a product base or whether it's service base, because we're not accounting for all the true costs. So once we figure that out, then we're actually going to take the second tier, is removing the employee costs, and we're left then with all of the real costs without that labor contribution, so we can get our true cost of goods. When I work with clients, I work with a lot of people across Canada. I do a lot of work with a bank in Canada called the Business Development Bank of Canada, where I work with medium-sized businesses making anywhere from $5 to $20 million in annual revenue. And top line revenue, everyone's really excited because they're like, wow, we're doing really well, we're doing really well. First thing I always ask is, can you send me the financial statements? And at the end of the day, the majority of them are operating at a 2 to 5% net profit, not accounting for all the real expenses. So as soon as we do that, they end up in a deficit position. And 99.9% of the time, where they are losing their money, where you are most likely losing your money, is in your pricing strategy, because we haven't done this cost of goods. So I'm going to give you a heads up here because I have intentionally left this exercise for day 5, because this exercise needs to be done for every separate revenue stream that you have. Most of us have lumped all of our cost of goods into one bucket. Although we have 4 revenue buckets, we have all of our cost of goods in one bucket. And this is why we're losing our money. So this is an important exercise, and I want to show you how to do it on Friday. And then I would love for you to be able to take the weekend and apply the same methodology to each one of your revenue streams, so that when we get back to action on Monday, you're going to know exactly what your cost of goods are as a percentage for with labor and without labor. All right, so not to belabor that anymore, let's move on. So benchmarking for profit, this is something that we're going to do after we do something called the weighted pricing model. There are definitely some tools that are not in here. This is why we have the equipment room. So in the equipment room, we have the weighted pricing model. And then we also have another tool that I probably should have put in here, which I'll probably do for another challenge, but it is how to plan for profit. If any of you have been through my boot camps before, I have to chuckle because this is usually the one where people are pulling their hair out, because there's a step-to-step process where you have to know 3 specific numbers. One is your indirect expenses as a dollar value, your cost of goods as a percentage, and your net profit goal as a percentage. And I was giving everyone the calculations so that they could understand what their new revenue targets needed to be. So you will all be very, very happy to hear that I've created an Excel template for that. So you just need to input the 3 numbers and the rest of the math just starts to work itself out. You're probably like, oh, thank God. So I chuckle. That's almost a little bit of an inside joke for any of you who have been through the boot camps before. All right. This benchmarking for profit, this is more for you after we're done together, because every week, every month, you should be benchmarking for profit. Right now, I can almost guarantee you what you're doing is you're looking at your notice to readers or your annual reports 3 to 4 months after they've been prepared by an accountant. And then you're surprised, disappointed maybe some of you pleasantly surprised, to realize that you're worse off than you thought. You had a lower net profit than you thought you did. Or again, if you're pleasantly surprised, you did better than you thought. But listen, at the end of the day, there's nothing that you can do to fix your situation if you're looking at your data 4 months after the year is done. There's nothing. So this is why I want you to be coming to this tool regularly, to either use this one where you're benchmarking, you now have your goals with respect to percentage points, and I'm going to explain all of that, but you have your goals with respect to percentage points. You dial in and you make sure that this is happening for you on a regular basis. Because if it is not where it needs to be that month, hopefully if you're looking at this on a regular basis, specifically weekly, you can still fix the month, right? Versus looking at it after the month is done. So the more regularly you do this, the more or the easier it's going to be for you to fix the problem while you're in the midst of it, instead of it snowballing. The last tab not last, I keep adding tabs here. There's this tab as well, which is your monthly tracking. So now it's going to show you what your plan is. It's going to take you from a week 1 actual, week 2 actual, week 3 actual, your month to date, so that you can be having discussions with your team so that you are so dialed in on a regular basis, and then your variance to plan. The other tabs in here, good Lordy, how are we going to get all of this done in 10 days? Hey, you're probably like, what have I signed up for? Who's this crazy woman? The other tab here is this is your equipment list or your equipment costs. I love this one, especially for you manufacturers out there or excavating businesses. If you're sitting on very expensive pieces of equipment, that equipment is costing you on a monthly basis, a daily basis, an hourly basis. And this tool will actually, when you start putting in the data, it starts including, look at this, including monthly maintenance, monthly insurance, carrying costs, right? All of the interest that you're paying on that equipment. It's going to show you very quickly how much it's actually costing you, right? Per month, per day, per hour. So now you can take those numbers and we can move them into our pricing strategy and our cost of goods strategy, huh? Love it. What else do I have in here for you? Debt repayment. There's actually another calculator as well. This one doesn't calculate it as well as the one that's in the equipment room, but it's a good place for you to list all of the current business debt that you have, because if you've gone through the matrix, you know that your interest is going to add up. With some of this debt, if you have the opportunity, if it's not term loans and you have the opportunity to start repaying it faster, let's put a plan together so that we can make sure that we're doing that, because those interest costs that you keep incurring to service this debt, they can drown us, right? So let's just make sure that all of that is organized. Good Lordy, 25 minutes to go through the tools. That's what we're going through together over the course of the next 10 days. So I love that we're doing this over 10 days, because normally in a boot camp, I try to shove this down your throat in like 5-6 hours and everyone's a little dizzy after. So we get some space, you get to decompress, you get to, okay. Moving on and kind of take it a chunk at a time. Okay, so that is my tour, everyone. Now we have to come back to step one, chart the data. So here's what I want you to do today. What you're going to be using today is you're going to be using this first tab, which is called charting the data. I am actually going to turn this over to, I bet you guys got scared that I was going to ask one of you to host. Hey, no, don't worry. Okay, I want to show you a couple things. Could you imagine if I shut you down at one point? That would be awful. Okay, here's what you're going to need today. You're going to need, obviously, your worksheets that we just went through. Don't worry, I'm going to come back to this in a minute. But this lovely pixelated image here is a sample of a notice to reader. So what you are going to need today, as I had mentioned in my earlier email over the course of the weekend, is that I sent out over the weekend. If you can start to pull together all of your historical financial data as it pertains to your business, so your notice to readers and your bookkeeping records. And the only reason why I want you to have your bookkeeping records is because oftentimes in your notice to readers, you will see here that more often than not, all of your revenue streams are lumped into one bucket called sales. So if your bookkeeping records have split those out, beautiful. You know, the little planning for profit angels are coming out. If they don't worry about it. That's the work that we are going to do together. So we are only pulling all of this together because I want you to know that oftentimes we repeat what we don't repair. So we want to learn from our historical mistakes in business so that we will not do again what did not work for us. And we also want to learn what did work for us. So you're going to need your notice to readers. Now, one of the things with notice to readers, there's a couple of tips or tricks here for you, is that in every notice to reader, it usually compares it against the year before. So you usually get 2 years in one when it comes to charting the data. So if you can switch your mind, because the way that it's recorded in your spreadsheet is it's going to ask you for 2015 numbers and then 2016 numbers. So if you're okay making that conversion, you can just use this one document. Otherwise, just pull up each notice to reader and then use the year that your eyes can adjust to. So that's one piece with notice to reader. The other piece that I need you to be aware of is that oftentimes with notice to readers, as with our bookkeeping reports, we usually just have one bucket called cost of goods, right? Or direct expenses. Okay. Good to hear from you, Jared. Catch you later. Thanks for weighing in. Okay, so when it comes to cost of sales, we more often than not, with cost of sales, we've bundled it all into one bucket, even in your bookkeeping reports. You may have separated cost of sales. So for example, you may have separated direct labor, indirect labor, materials, any other sort of input. So you may have different line items, but it's still just all under one piece called direct direct cost or cost of goods, not per each revenue bucket, right? So that's okay. That doesn't matter either. We just need to get this data in somewhere. I just want to draw your attention to that. Okay, now the next thing that we need to be aware of with our notice to reader is that under expenses, accountants are usually either organizing these from an alphabetical perspective. So accounting might be first, and then amortization, and then bad debts, and whatever, or advertising before bad debts. Or accountants might also, in this case, most expensive costs, right? Highest costs all the way to least costs. So however they're organizing it, that's fine. However, I'm going to make you change that up as we start to shift the data over now. Okay, so what's going to be important, what you need to know here is that I'm going to be asking you to take all of these expenses and put them into one of 4 categories. You're either going to be putting them into people expenses, team and personnel. You're going to be putting them into space and operating. You're going to be putting them into sales and marketing or promotion, or you're going to be putting them into other. And other oftentimes is going to include things like bad debt. It's going to include things like amortization. It might include things like loan payments or interest payments, right? So I just want you to be very aware of those 4 categories, and there's a reason behind my madness in terms of why I'm suggesting that you do that. You're going to have to trust me for the time being and why that's so important. So it's really up to you to decide where they're going to go. But what I find really interesting about this exercise is it might bring to light stuff that you're not aware of, right? So for example, meals and entertainment, that's usually a big one. That's kind of one where it's like, oh my gosh, well, was that employee expenses? Was that us eating out? Or was that taking customers out? Right? So again, I don't want you to go through having to sort out what was for what, but going forward, we are absolutely going to split these expenses, because if it's a marketing expense, right, meals and entertainment, we need to be able to measure that we're getting a return on investment on that. Does that make sense for everyone? I hope that does. The last little piece that I want to show you on your notice to readers that might be an area for you to take note of is other income. So sometimes they might be showing down here. So for example, in this example here, in this demo, says gain on sale of property and equipment, right? $23,945. This is not revenue that is a part of your operating, right? This is not a part of your business model. This was actually, I think they sold some equipment, but that they're not in the business of selling equipment. This example is a construction business. So I don't want you to add any of these other income streams, like whether it's money in from an investment or whether you're getting rental property money in, right? Because you're divvying out a portion of your building or something, and then that rental property is coming in. This is not part of your business model, so we're not accounting for that in today's exercise. So I hope all of that makes sense. Before I move on, I believe there's a couple of questions here. Did we receive a password for the equipment room? Yes, it's My Path to Profit. And I'm signed into Epiphany, but cannot open the locker room or equipment room. So just a reminder that the equipment room that you're going to be using for planning for profit is the P2P equipment, and I'll come back at the end to make sure everybody's clear with that. So thanks for those questions. Those are awesome. Okay, let's go back. I'm now going to show you a demo of how you chart the data. So using that exact same notice to reader that we just looked at, if I go back to, so when you're doing this, if again in your bookkeeping records, you actually have revenues broken out, that's phenomenal. So you just input your numbers here. This is all you're doing. Once you get the hang of this, this is probably going to take you, I'm going to be honest with you. The first time you're doing it, you're probably going to need anywhere from 30 minutes to 45 minutes to get this data charted. But going forward, right, for me, when I'm working with clients, I can usually get this done in 20 minutes unless there's a lot of schmozzle. going on. So if all of your sales are just recorded as sales, that's completely fine. We know that in the future, we're going to have to make some adjustments. You can see in this example, their notice to readers later on, and actually these were bookkeeping records, they actually started to break out their revenue streams. So in 2013, they broke out framing, house starts, miscellaneous income, and interest income in here. You can see I added these. I probably should have not added them, right, based on just what I had said, but I put them in. That's okay for us at this point, especially over here because a big chunk of their income came in from miscellaneous income where they had no idea where it was coming in from. So this is all you do with income. Pretty straightforward. You take it across. I see another question. If you're in a service business, would I add my salary to cost of goods or expense section? So Helen, for today's exercise, you are definitely going to add your salary to expenses. We are going to be looking, when it comes to understanding our cost of goods and your labor input, we are going to account for your time in that space. But today, absolutely make sure that your salary is recognized under owner's expenses. But again, today we're just charting data as it pertains to your notice to reader and your bookkeeping records. Before I forget, if any of you need some support with this, you can always text me today at 306-713-8321, and I'm happy to answer your questions. I do have a couple of sessions after this, but if you text me, I can fire you back a response earlier than or quicker than I would with an email. Okay, so that's revenue. Now, you are going to go down to your team and personnel expenses, right? So again, this is where I am going to be asking you to break out some of these costs. So professional fees, we took a look at that. We said, okay, professional fees, they're about team, they're about people. I'm going to put them under personnel. Again, it doesn't matter where you put it, whether you're going to put this under space and operating, but typically my rule of thumb is that if it has to do with people, I'm putting them under team and personnel. If it has to do with general operating, that's where I'm going to put it. So in this case, we had professional fees and we had accounting. If we go back to that notice to reader, those were the only two expenses that we had for team and personnel. Helen, this comes to your question, because in this case, these individuals, these two partners, were recognizing their labor under cost of goods, right? So again, historically, it doesn't matter so much what it is that you did. We're going to take this going forward in the future and we're going to put it under salary, but just make sure it finds a space to land in the present. This history piece is only going to be today and tomorrow, and we just need to learn from it and then move on from it. So under space and operating, you'll see automotive equipment lease. This is basically, again, I just took everything from the notice to reader. I wrote it out here, and each year I went over and I put the expense in the column that it needed to be put in. Now, what might happen for some of you, I did the same with sales and marketing, and I did the same with other expenses. Now, this is an old example. Your cost of goods is higher and your other expenses comes in here. Again, you're going to chart all the data and it's going to add up the exact same way, but that's all you're doing today is you're converting these things, bringing those numbers over and putting them in the year that's appropriate and in the space that's appropriate. The only other thing that I wanted to draw your attention to that might come up for some of you is that you will start to see potentially if you've had any changes with bookkeepers or with accountants. Oftentimes the way that they organize their information gets all, I don't want to say messed up, gets all switched up for you. Everyone's got a different way. So you might find that, you know, you're coming along, and I think there's actually some examples here, and I'm trying to remember where they are. But yeah, I mean, this is interesting, right? They've got automobile expense, automobile expense, automobile expense, and then obviously all of a sudden there's nothing. It's because their automobile expenses, I think, got lumped in here somewhere else at some point, and I forget exactly what was going on there. But again, I don't want you to be concerned about, you know, where you're putting the numbers. Just put them exactly where your notice to readers are saying. And if you need to create a new a new category here or a new legend because now you have a new accountant that's calling automobile something different, then just put it in there, because we're going to come back and we're going to take a look at this. I'm going to have some really good questions for you to consider tomorrow as we start to assess this. So when you're doing this, again, just input the data. I'm available if you have any questions. It's pretty self-explanatory. I think the most challenging piece of this is getting yourself organized with respect to what expenses go where and staying in the current year that you're assessing. One of the tips that I do have for you here is if you take your notice to readers, and I tried to do this with editing it here, and I had some hard time, I had a challenge with it. But I usually take a marker, I take 4 different colored markers, and for each one of these categories, I highlight it with the respective color. So if we were saying that professional fees and accounting were going to be team personnel expenses, then I would highlight both of these in yellow. Interest on long-term debt, if that's going to be another expense, right? Other, I might put that in blue. Advertising and promotion might be green, right? Insurance would be operating, let's say that's purple. So I'm going to have 4 colors. This is going to help you get a little bit more organized when you're transferring the data over. That's the hardest part of this, is just, and usually for me, it's because it's on 2 screens. But if you've got these printed off, you've got them color coded, you just input the data, remain current with your year, and then at the end, just do a quick check to make sure that your revenues are the same, right? And your cost of goods are the same, and your general expenses are the same. That way you'll know that you've entered in the right data there. So that's really, hopefully that's pretty simple for you today. I hope I've explained that with clarity. I'm going to see there's a question here. What about dividends? So yes, if you are paying out dividends, now it depends. If these are dividends to you and you've taken those as salary, I would probably add that, not as salary, but as compensation. I would add that as owner's compensation. So I'd go back up to, here into team and personnel. I would put owner's salary or owner's contributions, right? And then I would add that dividend to that expense in there. That's typically how I do that in the past, so that we're accounting for it somewhere. If it's a bonus out to investors, again, under team personnel, people expenses, I would probably put in, you know, bonus or not bonus, but dividend payout to investors, and make sure that it's accounted in there as well. Either there or in other, just accounting for it somewhere. That's a really good question, Helen. Thank you for that. Okay, I just reviewing my notes, chart the data, my email, tanya@epiphany.ca. You have my cell phone number. I have talked about the tips, your notice to readers. I've talked about color coding, the change of accountants, and true operating revenue. Okay, I've talked about everything that I need to talk about today so that you can get this exercise done. What I am going to do now is I am going to, you're going to have to bear with me, but I'm going to unmute all of you. And if you have any other questions, you can weigh in, absolutely. I'd love to answer them for you. If you have them now, let's do it together as a group. If not, you can always text me afterwards. All right, so here we go. Unmute. Okay. Everyone's unmuted, and you're welcome to chime in if you have any questions.
Tanya?
Yes.
I just have one question. About employees and subcontractors. It seems like you had them in cost of good, where I would have. Did they don't go in personal, team and personal?
Well, it depends. This is where we get to play around a little bit. But the difference between the two is I want you to think of when we're, and it's not so much under charting, because if in the past, if you had subcontractors under employees, let's put them there, right? It doesn't matter. But going forward, where the distinction is going to be is that if that subcontractor is attached to a project and is getting paid based on doing the project and not recognized as an employee of the business, with benefits and with all those other pieces, right, we're going to recognize them very specifically as a subcontractor. This brings up a really good point, Richard. I'm going to put into our equipment room, it's skewed Canadian for sure, but it's the difference between subcontractors and employees. So if these people are employees and you have to pay them a regular amount every month based on the contract that you have with them, and you're giving them the source deductions and you're taking care of their insurance and you're taking care of their WCB, workers compensation, if you're doing all of that, we are going to recognize them as an employee. If they are taking care of all of that, we're going to recognize them as a subcontractor. But you'll see when it comes to pricing, making sure that our projects or our products are priced appropriately, we are going to be accounting for all of their energy and effort in.
Okay, yeah. And so like on my profit and loss, they are both subcontractors and employees. They are separate already, right?
Okay.
But it's when like how to categorize them in your worksheet here, because I would put employees into the category team and personal, right? That's what I would instinctively think. But I saw you had them in another category lower there.
So again, so for charting the data, I don't want you to worry too much about it. I just want you to go with what your notice to readers or your books actually say. Okay. Right? So if they're in your cost of goods right now, you just keep them in cost of goods. Don't even worry about it. It's just to see where, like, were you profitable, were you not profitable, and where were some of the hiccups, or what I call the hazards, so that we can make sure that we're going to be changing that going forward. So today it's not so important. When we get into day 3, that's when it's going to be important for us to start recognizing where we're going to put these people.
Okay, that sounds good. I'll get to work. I'll see you tomorrow.
Okay, bye, Richard.
Okay, bye.
All right. Any other questions? I hope, does everyone know how to unmute themselves? I hope so. Okay. Any other questions, troops? If you do have a question and for some reason you can't get your microphone unmuted, please just throw it up into chat so I can see it and make sure that you're all off to a rockin' start here. All right. I don't see any questions. Oh, I see one chat. I see everybody hanging around. Okay. How many years to chart? So again, Janelle, it's completely, you know, if your business goes back before 2010, you know what, I'm usually, in my experience, I haven't charted that information before. If you want to chart it, you can add those columns here. But what I would recommend is, if it goes back before 2010, I would take a look at your notice to readers, and I would take a look at your profitability. And if you were super profitable those years, or any of those years up until that point, I would start to take a look at, I would probably chart it. I would put that in to say, okay, what was actually working so well that I was making a profit here? So just input a couple of columns. It won't, actually, yeah. So you know what? I'm going to take that back, because if you do that, all the formulas are going to get mixed up here. So why don't you, if you go back before 2010 with your numbers, take a look at it, take a look to see what years were profitable or if they weren't profitable, and then let's you and I just touch base together to see what we can learn from those, so that we can move forward in day 3 to make sure that we're learning from those opportunities. But yeah, don't add the extra columns here, because that's going to throw out all of our formatting, and then we're going to have to start from the beginning again. Thank you for that question. All right. Any other questions? Okay. I hope everyone signed on to the right challenge, Planning for Profit. Again, just to draw your attention to, because it's come up a few more times through my email, just so that everyone's aware that what we are using here today, what we're using for Planning for Profit, is under members, we are actually using the Plan to Profit equipment. That's the room that we're using. The locker room and the equipment room, these other two are for the Matrix Challenge. So if you've been a part of the Matrix, you have access to those. If you've not been a part of the Matrix, you're just jumping right back into Plan for Profit. Although if you're interested, there's a Matrix Challenge every month. It starts the first Monday of every month. And what you get out of that is knowing exactly what your salary needs to be, what your business has to get into the position of paying you so that you can take care of everything at home. You're saving, you're sharing, you're spending, you're investing, as well as going to tell you what you need to turn your business into from an investment perspective, right? The most powerful investment opportunity you have right now within your control is your business. It's not even your property, believe it or not. If you've done the Matrix, you're going to know that your property value on average appreciates by anywhere from 4 to 6%. You take off the interest, right? There again, another 2% net profit every year. Your business, I'm not going to let you out of this challenge without budgeting for at least 10% net profit. So just so you know, that's our first goal. If you want to go higher, you can absolutely go higher. Okay, Carla, the Plan to Profit equipment room doesn't show on my back end when I log into the Epiphany website. Do you mind? I did notice. Can you refresh, Carla? Because I noticed that that was hidden about 2 hours ago, and our team actually updated that. So if you hit the refresh button, it should show now, because I absolutely agree. It was not showing about 2 hours ago. So that should take care of that, hopefully. I love it. All you guys have so many great questions. I really appreciate it. I don't have that option on the website I am logged into. Okay, so it's 11:50 now, and both of you, Dave and Carla, when you hit refresh, it still doesn't show. Okay, if that is still a glitch, because it is showing on mine, I'm going to go back to the team. We'll get that figured out in the next 2 minutes here, because it should be showing up. Okay, thanks for letting me know, guys. We'll find out from the tech team what was going on there, but just hang tight for another minute or two. Well, maybe 5 by the time I get off the call, and we'll make sure that that's up and running for you. Okay, any other questions? I will be sending out an email with a recap of today's assignment as well as the video drill. And other than that, just making sure there's no more chats here. I think we're okay. Oh, great. Okay, thank you, Carla. So Dave, just so you know, yeah, it's showing for Carla. Oh no, yes, it is still not showing for me after logging out. Okay, sorry, I misread that. Okay, I'm gonna get to the tech team right now, and hopefully we're gonna get that fixed before 12 o'clock today, so that you've got that going for you. All right, that's it. I'll send out an email recap. The video drill will be available to you in the equipment room under day 1. We'll make sure that you can access that in the next couple of minutes here. And then other than that, feel free to text me, email me with any questions, but text is definitely faster. Okay, thank you for your time. I'm super excited to get working on this with you. This is definitely a game changer when it comes to your business. Trust the process. I've taken businesses from, negative 255 to plus 350 in like under a year, 10 months, right? This is pretty powerful. So I'm curious to see how we're going to work together on an online challenge. Please reach out to me if something isn't working for you, because I want to make sure this is the best experience possible for you. Okay. Goodbye, folks. We'll see you same time, same place tomorrow, 11 o'clock. It's the exact same link. You're pre-registered now. Have a great day and get to charting that data. All right. See you later. Bye.